Everything in this video is not intended as investment or financial advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. It has been quite the past 24 hours when what seemed to be the worst over after the weekend got much worse Monday night into Tuesday morning. Let me start with explaining a little bit about the interconnectedness of Alameda, FTX US, and FTX International, or FTX.com is how it's sometimes referred. There may have been some degree of commingling of funds. I don't know any special information here as far as what's going on that side of things. But it's been long known that Alameda and FTX and Sam Bankman-Fried, or SBF as he's known, are very closely tied together. Alameda Research being the hedge fund arm. They have a VC arm. And this was on September 14th. But this was a known, not even an open secret, it was a known fact for many, many years that this was the case. And what may have started the ball rolling recently was, I believe it was a CoinDesk article first, who looked into Alameda's balance sheet and again raised the question of whether or not that interconnectedness was a problem. It turns out it may have been a problem, despite what SBF may have said publicly or on Twitter, because as of earlier today, the 8th, FTX.com, FTX International, and Binance have come to an agreement of sorts, a loan, a bridge, a takeover. I don't know what words to use that are appropriate here, considering it may or may not come to fruition. But FTX International seems to have been short on reserves to fill customer deposits when there was concerns that not all the assets were there and there was effectively a bank run. And I'll leave all these links in the description below, but this is a really great Reddit post sort of breaking down what had happened when there was some mudslinging on Twitter and CZ, the CEO of Binance, moving to liquidate a large FTT position, much like BNB, Binance Coin. FTT for FTX would also be categorized as an exchange coin. The difference here being that FTT does not have a layer 1 network like Binance does, Binance Smart Chain, but it looks as though FTT was being used widely and broadly as collateral. And when you have loans out based on a single collateral volatile instrument, or an instrument that wasn't volatile and now is, there are issues with that across the board. And that's likely how Alameda and FTX.com may have gotten into trouble here. Again, I don't know all of the details. They will be emerging, I'm sure, in the next few days. But if you were using FTT as collateral, as Alameda may have been, and the value of said collateral drops 70% in a day, it's certainly difficult to quickly shore that potential margin call or what have you related to collateral there. I don't know, again, I don't know all the details. I don't think anybody does right now, but that was a big part of it. So there was a risk that they didn't have reserves adequate to meet customer demands, effectively a bank run, and then all confidence in FTT, the token, completely evaporating. FTT, the token, is not traded on FTX.us, which is likely an admission in its own right that FTT has properties of a security. I'm not a lawyer. I don't know what the legal terms for that are, but that's what I suspect was their thinking at FTX. In any case, down 70% today. So like I said, we had Binance CEO CZ come in and acknowledge that they signed a non-binding LOI regarding acquiring FTX.com and to help cover liquidity issues. Now, if the liquidity issues are bigger than was first thought or reported or understood, then it's likely CZ backs out of the deal. Again, I don't know information beyond what we've been told, but that is likely one way this deal could go south. And if you look at the difference between BNB and FTT today, markets had initially rallied on that announcement from CZ, and things then went south quickly when that hole on Alameda or FTX.com's balance sheet was bigger than initially suspected. And this spilled over into all markets broadly on crypto, digital assets down across the board, 10 to 20%. That's when we saw significant panic, and likely had some help here from additional OTC marketplaces that spilled over into the spot market. And we also saw Coinbase and Kraken having connectivity issues as they effectively just get, DDoSed with users, latency issues. Cointelegraph says signups here, but I'm sure a lot of people were panicking, thinking, if you don't live this stuff every day, you may see this headline and think, okay, this is obviously going to happen to every exchange. And that's certainly very unlikely considering how Coinbase and Kraken are much different than FTX US International, Binance US International. One of the potential solutions for this problem in the future is to put forth proof of reserves. Now, Kraken already does this. Binance is saying, this is CZ saying they are going to do this going forward. Basically, it's auditing their reserves and being sure that there isn't a massive fractional reserve being run here. Now, even in FTX's case, if the calculations for the reserves are based on the value of FTT, which is an interesting accounting practice, certainly, but if that was the case, it may have looked as though there were not fractional reserves, even if this type of system were to be implemented, which is why you really need to know on the centralized exchange side of things, is one digital token representative of value that's being rehypothecated, or is it the actual token itself? And proof of reserves can help answer that. So Brian Armstrong, CEO of Coinbase, came out and shared some thoughts. I won't go over that, but I'll share it in the comment section below here. And Jeremy Alaris is the head of Circle USDC, discussing his thoughts and comments as well. Coinbase further released a statement clarifying their risk practice, what they do, how they protect consumers. And again, Kraken has had proof of reserves for quite some time, so a user can go into their account, verify that what they have on the screen that they're seeing is actually available in the ledger of the company itself, and there is not a fractional reserve being run. With all that being said, the silver lining to all of this is the decentralized side of things, the blockchain side of things, the crypto side of things, the digital asset side of things, the decentralized finance side of things worked completely fine and continues to work completely fine. Here's a snapshot of the mempool of Bitcoin and ETH in a second, but this is specifically Bitcoin here. And what this shows is the pending transaction counts as well as the fees for those pending transactions. The deeper the green, the higher the fee, the higher the priority. And you can sort of see, even over the past couple of days, we're not seeing a massive spike in transactions here, even on a relative basis since November, beginning of the month. You certainly saw an uptick in transactions last night, but in general, not too much to report here. On the Bitcoin network side of things, on the ETH network side of things, this is the 7th and the 8th on the right side here. And in this yellow and red section, you can see that there was a lot of high-paying transactions on a relative basis because they wanted to get off exchanges or move coins to exchanges through DeFi, whatever they were doing at that time. When we see big humps like this in the mempool based on fees, this is typically consolidation of reserves or a large exchange moving coins around, and doesn't typically represent users because they have very low priority here based on the fee to move things around. So they just let it sit in the mempool till it expires in ETH's case, or just sit in the mempool until it clears and is confirmed. But you can see how the difference here between low priority and high priority transactions. Even still, ETH running completely fine, no issues there whatsoever. And if we look at ETH's issuance since the merge, we are tipping into deflationary territory as fees over the past 24 hours have picked up pretty significantly. And because of the fee burning mechanism on top of the proof of stake component, issuance is currently at 0%. And you can see how that would have differed with proof of work ETH, Bitcoin here at 1.7%, and then ETH effectively at 0. And again, if we want to look at those fees over the past 24 hours, you can see this massive spike in transactions with a rise in price volatility. Unlike 2018, we are not seeing so far, this may change tomorrow, but if we look at exchange balances for Bitcoin in the orange here against price in the white, this is 2018, we saw a massive uptick in Bitcoin hitting exchanges in 2018. Now, not so much. We have a small uptick here. We're not seeing continuous day-over-day rises in transactions to exchanges, which typically represent selling pressure. ETH, very much the same. This was the end of the ICO era in 2018. And again, we saw an extreme rise in ETH on exchanges. In this current price environment, we're not seeing that. That may change again next week, may change the next day. But as of right now, we are not seeing mass deposits to exchanges. Looking at transaction counts for Bitcoin, we actually were seeing an uptick in on-chain activity even before all this started in the past week. This is 30-day average here of transaction counts in the orange, active addresses in the green. ETH, on the other hand, was seeing a decline in active addresses and transaction counts. In general, still holding within this multi-year range here, well within the 2017 all-time highs, 2018 all-time highs. A lot of this, again, was ICO mania. That sort of came and went. And what we're seeing here now is a sustained on-chain activity, largely fueled by things like DeFi, loosely NFTs now, which are seeing a massive drop in trading volumes. But nevertheless, this stuff still happens, and that's why ETH has held up on the on-chain activity side of things. Checking in on stablecoins here, USDC continues to tick lower here in the yellow. As far as circulating supply is concerned, Tether's ticking up slightly, and Binance USD ticking up week over week. And if we look at DXY, getting into the technical side of things, DXY has been strongly inversely correlated with digital assets and has continuously tried to break down here over the past few weeks, really since September. In technical analysis, you'd recognize this as an Adam and Eve double top or an M double top, now forming a sort of triple top, breaking that recent low. And if the FTX issues hadn't been spreading through the market currently, I certainly would expect digital assets to do much better than they are. Very clearly a crypto isolated activity right now because legacy markets had been doing decently well over the past 12 hours. Moving on to Bitcoin, if we zoom way out again, and we look at things like log regressions, or in this case, a power law corridor, and we get a sense for highs and lows based on the 3 previous all-time highs, we are certainly well within the boundaries of where we'd expect a bear market bottom to form. And there have been similar events that have been much worse than this. Historically, we had the Mt. Gox incident here that took many months, if not years, and is still evolving as far as people getting their money back from Mt. Gox. We had the Bitfinex hack here. We had Tether insolvency rumors here. We had legacy markets plunging in 2018. We had a Bitcoin fork civil war. We had China bans Bitcoin over and over again in 2017. We've had all sorts of regulatory denials on the Bitcoin product side of things. COVID, obviously. And prior to all this, even this year, we've had 3AC, Luna, Celsius, right? And I know all these things are here because I lived through it. But if you were just in the market unaware, zooming out, this may end up looking like a blip, just like everything else has in the long-term sense, right? Now, what we don't want to see in the near term, zooming in on the daily, is a breach of what is effectively this temporary support area at around 18.5. This was the highest volume day, I think, for Bitcoin and Ethereum on Coinbase and maybe a few other exchanges. So there's certainly a flurry of activity today. Thus far, we haven't broken lows, which is a very good sign. But we are certainly lucky that we were performing well coming into this and had support to crash into, right? Because if we were at 18.5 coming into this, things would be much, much uglier than they are now, I'd imagine. The levels that I mentioned last week as far as the 24K level, still in effect. So long as we don't make lower lows, the possibility of accumulation down here continues. And again, if we look at Bollinger Bands on the weekly, what we really do not want to see here is an expansion to the downside. If you're, if you're bullish. If you're bearish, then what you do want to see is an expansion to the downside here, much like we did in 2018, right? If you're bullish, you do not want to see that. You do not want to see lower lows. I mean, it's really that simple. You want to see bands remaining tight, and you want to see price back above the 20-week moving average. Should we break down 10 to 13K, is still well within the cards, well within prior historic drawdowns, and completely fair game based on previous drawdowns, right? No cycle is the same, but sometimes they do rhyme. I'll just mention ETH real quick here as well, which also had a negative 15 to 20% day, thanks to a mixture of contagion, panic, liquidations, short interests rising, much like Bitcoin's 18.5 level for ETH. That's likely around 1,200, but still remains above the 200-week moving average, near the 2018 all-time high. I mean, not much has changed in the grand scheme of things. The sentiment for the entire crypto market as a business, I think, has turned extremely sour due to the FTX issues. But in general, price-wise, even with this down move today, things don't look as bad as they could look, right? Again, if we're at lows, breaking lower lows here, things could get much worse. Even other stuff like Link still looks decently okay, as it had been breaking out to the upside on trend. One last coin I'll mention is Solana, which FTX, SBF, Alameda has intimate involvement with and has a ton of on their balance sheet, both locked and unlocked. You're probably seeing that unwind today and over the past couple days. I'd certainly be more wary of anything FTX is adjacent to, just because they are probably experiencing the increasing need and urgency to potentially liquidate those coins. That's all I have for this one today. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.